discuss what the digital rupee is with Sharad Sharma, who is now joining us right here on ET Now. Thank you so much. We really appreciate it. You folks at iSPIRT, of course, are doing such fabulous work, and we thought who better than you to have on the channel to break it down for our viewers. Let's start with the basics, right? So we've heard about the big announcement from the Finance Minister. The Prime Minister's talked about it today. I'm guessing the RBI Governor will too at the press briefing after the monetary policy is decided on 9th of February. Explain to our viewers, what exactly is a digital rupee? How will it work? And then I'll get into the merits of it and why it can be a game changer.
See, the easiest way to understand digital rupee is to go back in time, almost about 20 years ago. So if you go back 20, 25 years ago and think of music for a minute, all music was physical. You bought it on cassettes or CDs. This is how you consume music. You brought it home, you put it on your device and you played it. And then slowly it started going digital. And, today we have only digital music, right? I mean, if you want to buy physical music, it's almost impossible. The same thing is happening to money. And there are lessons to learn, in terms of how this transition will take place. So first is that the first wave of digital music that happened would be things like Napster. Some of you may even remember that. Napster was launched in 1999. It was you could say a semi-legal way of sharing, music with each other. And it would violate the copyright law. And when Napster hit about 22, 23 million users, the whole society woke up and said, hey, for the sake of having digital music, can we give up our copyright law? And they made a conclusion that answer is no. And there was a coordinated action and Napster was eventually shut down. But digital music was not shut down. So what came in its place is what we have today as streaming services. Spotify is very common. We have this ability to buy music. iTunes introduced that with iPhone, if you remember, iPod, and said you could buy a song for $1. And today almost everybody consumes. Exactly. And everybody consumes music digitally today. So similarly, I think 20 years from now, we will have digital money. And there are three forms of digital money. The first is, you could say, the semi-legal form, which is crypto, that is slowly being legalized. And you saw some of that being announced in terms of transactions. If you do Bitcoin transactions or other coin transactions, there will be some rules that will apply to you, which are new. The second is called stable coins. That's another type of digital money that is there. And CBDC, central bank digital currency, is a third type of digital money. And the prediction is that in the future, you will have a mix of these three. Possibly the first one will be semi-underground kind of an economy, but the next two are going to be somewhat more legitimate forms of digital money. So this is a shift that is happening, and we can talk a little bit about why do we need this shift? Do we need a shift? Is it a good thing or a bad thing? I'm sure you're going to ask me some of those questions.
I am going to be asking you those questions. So let's begin with that. I take the point about how we all are embracing digital, and I get that point. But the first question I think my viewers will also want to know is that how will these transactions work? We've heard about some examples that happen in China, for example, but also we don't pay directly, right, for making these transactions, for printing money, or whatever goes behind of making of the coins, if you were to have those pesas, etc. So when I have it going to work with digital rupee, isn't it going to add to the consumer's cost?
Not in India, but the motivation for digital money, especially CBDC, which is what we are talking about. Digital rupee is a central bank issued rupee, right? Is motivation in most countries is actually to make it low cost and frictionless. See, what India managed to do with UPI is to have frictionless payments. Now, there is enormous envy in the world. They want the same thing. And the only way to get the same thing is actually to move to a new form of money, which is called digital money, whether it's crypto or stable coins or it is digital money. And but in India, there isn't a desire to do that. In India, frictionless money already exists. So if you go back, you go even to Scandinavia, which has a lot of credit card transactions. That's frictionless, but it's very expensive transfer of money because you pay between 1 to 2% fee for every transaction that takes place. In India, the MDR, as you know, is zero. So, so India has the ultimate solution when it comes to frictionless and low-cost payments. So that's not a problem at all. Why India is attracted to digital money is because digital money is also programmable. So the part of the digital money that India wants is programmability. I hear a little bit of echo, but so what is it that India is looking for? India is looking for a way to be able to enforce commercial contracts more easily. The simplest form of commercial contract is an invoice. I send something to you and you promise to pay me 10 days later. Now, this commercial contract is not enforceable in India. Even if I'm an MSME, there is a law that says you shall be paid on time. The practical reality of India is that to enforce a commercial contract is very, very hard because the court system is broken, right? And so that doesn't work out very well at all. So what do we do here? Can we use the digital money as a way to deal with this? And the answer is yes. How do we deal with it? Because now this commercial contract can be programmable money. It says once you receive the goods that I have sent you and they are visible in the goods ledger, then you can make sure 10 days later, the rule will be that it will debit my account and send it to you. That's a rule that I have, that's a promise that I have made that can be enforced as a form of a contract electronically. So in other words, you are now solving for trust in our system, and you can create trust between small entities and big entities, small entities and small entities, because you can now enforce contracts, simple commercial contracts across them in a way that was not possible earlier. Now, this is not a problem in the West. The West has a system to be able to enforce small contracts. And in fact, somebody doesn't pay me on time, I can easily go and get a resolution in 2-3 weeks at a very low cost. This is not an option in India. So in India, the motivation for digital money is to be able to build a new class of digital money that allows you to operationalize, basically say promises are kept in code, C-O-D-E, software code, rather than in quotes. So building an India where promises are kept in code, are enforced by code rather than enforced by court is a much better idea of leapfrogging trust. You know, we've leapfrogged in many places. As you know, we leapfrogged in digital infrastructure, we leapfrogged now in data with the account aggregator. This is the next big leapfrog that India can take, which is leapfrog from a low trust commercial economy to a high trust commercial economy. So that is really what underpins this as we go forward.
I can already think of so many property cases that would not be in courts if we had the digital rupee today with the intent that you're talking about. And so it can build on that, right? It can be person-to-person contracts, like I said, for immovable property, including real estate, vendor payments.
Yes. So, but we have to build it in the right way. So why is that important? So we have an early version of this already. So we have a goods ledger called GST. And we have a money ledger system, you know, which is underpins UPI. Now, I don't know whether you know, UPI does as many transactions on a month as almost all the crypto, you know, major coins of crypto do across the world, right? Now, so UPI by number of transactions, not by value of transactions, but by number of transactions is already big. Now, we know what are our transactions on GST today. They are also big and growing very rapidly. So we need a system that will allow a ledger system that will allow for both of these transactions to come on a common ledger. Now, there is no system like this that exists in the world. Blockchain does not handle this volume. Ethereum too cannot handle this volume given its design constraints. So therefore, it has become incumbent on India to be able to create this on its own infrastructure. And as you would imagine, this infrastructure, which is code named as Badal, And if you want to read a little bit about this, it's available on the iSPIRT blog. But it's a private public ledger built to deal with India's scale. And if you can deal with India's scale, you can deal with any other country's scale, as you know. So India is taking a leap here, as we have done in many other areas, to set the stage for the rest of the world. Why we are not doing it for the rest of the world? We are doing it for India. But in doing so for India, it'll be possible for others to benefit from it, because this will be a global public good rather than just a public good for Indians.
Oh, we gave UPI to the world. We've had the likes of Sundar Pichai saying, that how it's India's pride and wish he had thought of it at Alphabet. But before we let you go, Mr. Sharma, and fantastic points that you've raised and why we really need it and how India is going to show and teach the rest of the world. For the benefit of our viewers, what is it going to look like? It's going to be a digital rupee, as it's called. CBDC, something that a lot of countries around the world are going to work with, right? So what do you imagine it's going to be, like a QR code or what?
Effectively in India, the money part of it will be the same. It will work on UPI. On UPI, you have a bank account. One of those will be digital rupee. So you can actually take your physical money from your bank account and send it to somebody else. Or you'll have a digital rupee account and you can do the same. So for most people in India, it will not look any different when it comes to just the money transaction part of it. What I think will be different will be the part that is to do with the programmability, where contracts are entered in. And those will be third-party applications that will come in who will provide you that facility. Those companies will usually be the ones who maintain your accounts. So it will be the tallies and the khata books and players like that who will hopefully jump into this. And they will offer that kind of capability into the existing solutions that are there. So it will take very little adjusting for people to do. Where you generate an invoice, you will be able to generate an invoice where the rules of the invoice are already coded in. So it will be hopefully, quite easy for people to migrate to this as we go forward.
This is certainly exciting times ahead, right? So much that's happening on the net. This is the future as far as digital rupee goes. We're, of course, talking about a time when the first ever mortgage has also been given to buy virtual land in the metaverse. That's right, ladies and gentlemen, it's happened. It's all happening, and we're trying to be right on top of it. With that, Mr. Sharma, I'd like to thank you for taking the time out of your busy schedule and breaking it so nicely for our viewers so they understand what the use of digital rupee is, why it's a game changer, and of course how we can teach the rest of the world and how startups better start thinking about it as well.
Thank you so much.